Welcome, everybody. Hope you're doing well on this nice little Tuesday. Market's trying to bounce a bit after a huge spike and then a huge sell off. Came into some stacked support, at least here in the NASDAQ, which is what I've been watching. All right, so my name is Merritt. I head up Apteros Trading, prop desk. Um, there's a chat box here on the YouTube stream. Please upload your questions or type in your questions, and I'll get to them. Let's hop into it. Andre. For example, this week when we got quiet Monday but big news on Tuesday, would you expect the narrative to go to completion during news and just scalp on Monday without having a big core position? Yeah, that for the most part is fairly true. Sometimes you get moves into areas leading up to the news. Buy the rumor, sell the news. Who knows? Um, I tend to take each session at face value. I tend to try to look at what's actually happening in that market. Um, what what do the short-term conditions look like? Is there a lot of volume? Is it during rollover, which we were? Is there a lot of choppy bar to bar overlap? Where are we opening relative to prior value? All the kind of normal NADRO things that we like to look at to determine, are these conditions conducive to active trading? Is the narrative conducive to directional core position holds, things like that? And look, it's not going to kill you if you have a really good narrative and you hold it during a really crappy, choppy session to see if it starts working towards the destination. Still take your scales, still treat it pretty normally. Just because it's a quiet, crappy session doesn't mean that you just automatically shouldn't hold any core positions or anything like that. You never know what's going to happen. So if the narrative is good enough, it really trumps everything else. You position for that narrative to get completed. Um, but yeah, a lot of times I will tamper my expectations. I will shorten my hold periods. I'll scalp a little more, things like that. So it's fine. And really, there's some choices to be made there, personal preference wise, really. Hey, what's up, Victor? Good to see you as well. Christopher says, do you view futures trading as a zero sum game? Do you hold the same for other trading instruments, options, equities? If so, does that mean that she's reliant on losing market participants? I first and foremost, it doesn't matter. It just doesn't matter. If it's a zero sum game, if it's not a zero sum game, if every single winner is extracting money from losers, it doesn't matter. It doesn't matter. Um, I don't have much of an opinion on obviously, it's a negative sum game because the exchanges and the um, brokers and whatnot are pulling money out while everyone else changes hands, right? So, in that sense, it's you know, money's always um, bleeding out to those fine folks. Um, but look, it's too complicated. A lot of people think of zero sum as like really cut and dry, very simple. Like, you know, if John wins 8 grand on the session, that means that somewhere there's a Peter who lost 8 grand. And it's not that simple, right? Various people are buying and selling, various people are interacting together who have vastly different um, goals for executing in that markets. A hedger comes in and trades with someone who thinks the market should go higher, who interacts with the rest of the contracts of that person, of someone who's exiting a position and going flat. So you're not taking their money, right? So it just doesn't matter. It doesn't matter. It is an auction process. It's essentially a zero sum game, but I think when people ask that question, it's way overly simplified. And at the end of the day, it doesn't matter for us to profit. I'll quit saying it doesn't matter. And he had a follow up here. If not, can edge come from other sources? I don't know what you mean by other sources. Definitely let me know what you mean by that, and we'll come back around to it. Andrew says, did you change your higher time frame VWAPs from volume to time based? Yeah, I kind of did, and I've just kind of been lazy about it and not changed them back. I tend to prefer volume charts, but at the end of the day, here's that famous Merritt phrase for today's session: it doesn't matter. As long as it's a respectable time frame, given like how you're incrementing them up, and it's not like, you don't want one time frame to be 500 volume and then your next higher time frame to be 600 volume. On the time-based side of things, you don't want one time frame to be 30 minutes and the next time frame to be 45 minutes. They're too close, right? So the multiples of those time frames being in good ranges and giving you different information is what's most important. At the end of the day, time-based, volume-based, they all show good things. Some show it in a different way. At the end of the day, my charts are a little bit of both, so I can kind of see the smoothness of the volume charts and the abruptness of the time-based charts. And when time is marking and the market's not doing anything, time also shows that. So there's no perfect way to do those things. I made a switch when I moved to trading more markets than just one or two, and that way I could change the symbol and all the charts would work. Because if you change from crude oil to S&P to NASDAQ, they all require, for what I like to see, different specific volumes, not super specific, but generally specific ranges of volumes to show the time frames I'm trying to see. Well, guess what? If I just keep them all as time, it's standardized if I flip through them. Again, I mentioned that word lazy early on because now I have individual chart books for each of those markets, so I'm not actually changing them. I just haven't changed my charts back, and it's just fine. So, don't overthink it. Let me see if Christopher followed up. Meant to say, does that mean edge is reliant on losing market participants? At the end of the day, I think it is. The money has to come from somewhere. Now, could you take it all from hedgers, right? People who don't have that profit incentive in that market. Could you take it from producers, right? Could you take it from options dealers coming in and hedging? Yes, right? But at the end of the day, the money has to come from somewhere, and it's not coming from the exchanges and it's not coming from the brokers. So if you're making money, you're pulling that from the general, other participants, and so it's got to come from them at the end of the day. London says, is there any precaution you take coming into a rollover week, or do you treat it like a normal week? I tend to look, coming into holidays, coming into weeks where there's an anticipated news event, coming into rollover, coming into whatever, I tend to give the market the benefit of the doubt, go about my business as normal. And then again, I treat every day at face value. And if there's really terrible conditions, like I saw early on Monday, and I was positioning long most of the day Monday, I ended up getting out and I ended up missing the big move into the close. Now, I still had a good day and caught some small pieces of that, but if I would have just treated it more like normal and said I'm just going to hold this core position, it's worth it. I just didn't think it was that strong of a trade to hold, so I was a little more scalpy. So in general, I like to treat the days as business as usual until proven otherwise. Not too quick to jump the gun and say, oh, this is bad. But if it's clearly, bar to bar overlap, just choppy, messy crap, wait for the market to open up, wait for it to start trading a little bit, and then hop on a pullback and things like that if you can. Trader says, have you ever considered participating in the World Cup Trading Championship of futures trading? The winners usually net about 200%. Do you think you can keep up with that? Yeah, I could go compete in that. I don't have any incentive to. Maybe it would be good marketing for my brand, for the Apteros brand. Um, but I think people kind of know enough about me and have seen enough from me throughout for years, right? Um, but no, I've back when I was in college, yeah, I thought, oh yeah, competitions like that'll be really cool, stuff like that. But now I see that as a waste of time. The only reason I would do it would be to use it as like again marketing. Like, hey, look at me. You guys should buy my course. You guys should come join the desk. I think people identify strongly enough with me and Apteros as it is, but maybe I'm naive in that fact, and maybe that would be a big deal. Those are just my off the cuff thoughts on it. Ziggy says, are your scale-ins signal-based or more because they're favorable given your theoretical average? I don't believe in keeping up with the theoretical average. I think that's a bad thing to do. I won't get into that unless somebody wants to talk specifically about that. So nix that. But my scale-ins are essentially new trades, right? Had I not already been in my existing trade. So I very rarely scale into a trade. Probably what you're referring to is seeing some of my fills on Twitter where I'm adding to a profitable position or adding back after scaling out, and it comes back near the entry and I put the scales back on, then I scale them back off. But I don't do much scaling in. I will campaign around a core position, which technically involves adding to a position, but it's only adding once I've already scaled out. So it's just putting size back on. Anyways, once we've clarified that, they are as signal based as the rest of my trading, right? If I see a good place that looks like this would be a place to put risk on, those are the kind of the places where I'll campaign around a position as I've described here. We're going to move on. We got 3 questions in a row from Trader77. If we still have time, we'll come back to those. Alan says, I have rewritten my trading plan many times, usually making it more complicated. I tweak things to get more moves or eliminate losers. How do I accept a simple plan and rule set to follow? Great question, Alan. This is really important. I think when you start running iterations of this complex trade plan, you're going to get feedback. You're going to start to see this is too complex for me to follow. You're going to see a number of potential things. You might see this is too complex and it's not repeatable. It's not consistently followable because it's just too complex to think through at the hard right edge for the shorter time frames you could possibly be trading it on. That's one thing we see. Another thing we see is that you get it so complex and recency biased backfit to what would have worked yesterday or last week or whatever, that now markets continue to evolve, conditions are a little bit different, and now you need to tweak it again. And so you're in this constant cycle of like needing to kind of tweak it to do what would have worked on the past 3 trades. You should start to see that as an issue, right? So the best trading systems, and this is why I think Nadro is so good, is because it's a conglomeration of frameworks, right? It's not nitty gritty. This has to be perfect, specific, this. It's assess these multiple higher time frames, come up with the very best plan that you can from those when there's a plan to be had. And then we have a full execution model. And then for those that are interested, we have a way of using order flow to act as a tiebreaker to help with some tough decisions or to help you get a little extra edge out of some entries and trades and and when things are looking really, really good and favorable, or when things are looking poorly, and or allow you to have kind of a scalping process that fits within when there is no great higher time frame ideas and narrative to trade. So that's a lot that I just said there, but it goes back to it's important to have a trade plan that allows you to be robust, right? It allows you to, for example, this is why in my opinion, the most elite traders, maybe this is not true, from my experience, other than reading some books about Jim Simons and company, my experience has been that the most elite traders are discretionary. Okay? Obviously, Renaissance and those guys buck that trend. And I'm not talking about HFTs. I'm not talking about market makers. I'm talking about directional trading, right? Anyways, the reason that is because they allow the human mind, which is one of the most fascinating things in the universe, guys. Let's not discredit it. They allow the human mind to give you a simple example. Look at a chart that's going from the bottom left-hand corner of the screen to the top right-hand corner of the screen. And they allow themselves to say, again, this is just a simple example, that's an uptrend. However, someone who gets too specific with their plan of what an uptrend is, they might put some 8-period moving average or whatever, and whether price is above it or below it, and they might say, well, now it's a downtrend, now it's an uptrend, now it's a downtrend, when all day long the market just trended, right? As we would call our discretionary read of trend. So I just think that it's important that as a discretionary trader, you give yourself I'm having a really hard time talking today for some reason. Probably because I have a child who's going through like a not sleeping well phase. Unquestionable, right? Can't mess with checks and balances. You have to look at the chart. You have to ask yourself, you have to grab a pen and pad, and you have to jot down and say, yes, what is the trend? Oh, this is an uptrend. So I don't care how quantitative or lack thereof that read is, but the important thing about process is that there's a process for checking that read. Now, don't get me wrong. I'm all for getting as granular as possible with things, but this is such a great question around getting overly precise and overly complex. Make sure that you have the strict checklist, strict process for going about finding opportunities, but that when it comes to making, I think, individual reads, you work on all those skills diligently for years, your whole career. But when it comes to making those decisions in real time, try to make the read itself for that particular piece of process as simple as possible. I hope that makes sense. We could talk about that topic all day long, but we're going to move on and answer some more questions. Laser Chicken says, could you describe what a typical month might look at as a junior trader at an Apteros in terms of mentoring, meeting, reviews, real-time communication throughout the day? It depends. A lot of times our traders are put into different groups based on their level of skill set, based on whether they're a NADRO trader or doing their own thing. And so that experience for people is going to be very, very different. But for a core NADRO team, it's daily meetings, talking and discussing amongst the team the best narrative ideas each morning. It's daily reviews, showing all of the trade fills, rating ourselves with a specific ABC kind of criteria for the type of day we had, and whether or not we identified the best narratives, whether or not we tried to trade the best narratives, whether or not we were profitable or not doing so, all those kind of things. And then monthly is a big deal, but you really, it's unlike anything else in terms of, or it's not unlike anything else in terms of, as a trader, you will directly get in, whether you're in our community, whether you're on the desk, you'll get out of something what you put in, right? We have people who take more leadership roles on the desk and are better about doing the things that we ask of them. We have some people who come on and we put them a part of the core team, and they don't really put in the work and they don't really do much. And guess what? They don't last, right? So, you know, but that's a general commentary. Um, Claude says, if you could repeat a perfect, meaning like a machine, process every day, what would that look like? I mean, Nadro. I would identify the best narrative. I would do that work, prepare myself, sit down, be aware of what econ announcements were being released. I would then be ready for trading. I would begin to monitor for the acceptance of various narrative hypos if there were there. Then I would be keeping up with what the rhythm looked like. I'd be monitoring the developing value throughout the day for access to those ideas, those best ideas that I wanted to take advantage of that day. I'd monitor the order flow to act as that tiebreaker, telling me when something was a really good place to time something versus pretty shaky looking. That's perfect process for me on a high level view for answering a question on a Q&A format like this. Julian says, when the narrative completes pre-market, like today, do you view that the story is complete and immediately look for shorts? No, we have laws of market dynamics which specifically keep us from doing that or advise us against doing that. There is a spectrum of opportunity, and narrative completions do not provide the best opportunities. How big is Apteros right now? How big would you like it to be? If that's confusing, what I'm asking is, what does success look like for Apteros? We're 7 traders right now, and quite frankly, we haven't really grown larger than that. It's certainly slower at growing traders than I would like. But as we know, these things take time. Apteros is still extremely. It feels like I've been doing Apteros for 10 years instead of 2. But we've got really, really some quality people, again, assuming leadership roles, seeing success, bumping up size. So those are people turning into senior traders, and that's, to me, that's what Apteros, if you want to talk about, hey, what's the biggest weakness of Apteros? It's the fact that we were such a young crew, except for me, right? And now we're starting to see senior trader caliber people, which is just gonna, just really be able to grow it. So to me, success looks like that. More senior traders who can then, not take responsibility from me, but create a bigger area with more maybe specific niches that people have. People connect better with other people. I'm not the best person to work with everyone. All those kind of things, right? Teams begin to form in a little bit more isolation rather than everyone looking to me. To me, that's what success looks like when Apteros is no longer almost exclusively about me. To me, that's a big deal, and one of the things I'm pushing it towards. Do you have any advice on how to break the bad habit of locking in profit? Oftentimes, I'll get a great entry, stop myself out by locking in profit, and then it runs to the target. So Jake asked this question. Jake, let me give you some really tough love. And I'm going to be mean to you here because I want this to sink in and I want to help you. I don't know you, Jake, but I'd love to help you here. Stop being such an absolute amateur. The very first thing you read in any trading book, any piece of advice for any people who are getting into the trading world is that holding your winners is hard. And that the natural human thing to do, and everybody goes into the psychology of why it's easier to cut your winners quicker and it's easier to hold your losers longer. It's basic trading 101. You step into the arena of trading and you cannot avoid being hit over the head with that exact, hey, this is how humans are. This is the bane of the beginner existence of trader, is not being able to hold winners and not being able to cut losers. So buck up and just don't be an absolute beginner newbie you know, fresh trader. Understand that that's so like such in a as an analogy, just a childlike beginner kindergartner trader, right? Get to middle school, get to high school, get to college, you know? Um, so, anyways, I say that to you to motivate you, certainly not to criticize you because I've been there, we've all been there. That's how humans approach trading as a natural tendency, which is why in my Nadro course, I teach module 1 about what we call this natural human trader. And then we teach people how to work to become this evolved human trader. So, anyways, kind of taking a different approach with you here than giving you some like nice little soft toss advice. My goal here was to kind of piss you off with yourself and say you got to be better. Now that you know that, now that you've heard that cold, hard, brutal truth from me, the only other piece that you need is, because now we've talked about what not to do, but listen to this. This will be your best lesson all day for everyone on the call. Don't focus on what not to do. That's not enough. Focus on a process for what to do. So now that you know the stupid beginner behavior, and we should be embarrassed if that's how we behave when we're trading, what can we do? That's where process comes into play. If you're exiting winners based on that natural human tendency, you need to come up with a set of basic rules for managing trades. And then it's a matter of, can you stick to your rules? Do you want to make money trading? Well, then this isn't a hobby, right? Where's my ain't no hobby hat? It's not here. You must approach trading as if you're trying to be an Olympic medalist. You're trying to be playing the World Cup soccer. You're trying to make it into the NFL, American football, right? NBA basketball. You think those guys just like were born with some talent, and even the most talented people didn't spend more, like Michael Jordan didn't spend more time in the gym than everyone else? Guess what? You guys think I don't spend more time working on my trading than most of my students? You would be wrong. I work harder than most of my students, and I'm the one that's kind of already there and then teaching them. It's crazy, right? But it's human nature, whatever, 80-20 rule, whatever. You have to be one of the few who's going to put in the work and who's going to accept this is how I cannot behave, and who cares enough about the long-term vision of their trading rather than their short-term little emotional needs to put pen to paper to develop a basic process, no matter if it's not the best process, a process which you can evolve over time, but not over tweak and overcomplicate, like our first question of the day, that you can have for managing winners. So you have the psychology piece, you have the process piece, and that's where the marriage of those two is where the magic happens. All right, we have time for one more question. Let's see. This one looks interesting. Ankit says, or Ankit, I'm not sure. My problem with futures trading is risk management. My stop losses are either too wide or too small according to the market structure. How do you structure your trades according to the daily condition? It's hard to know how to steer you on this question because here's my hunch. My hunch is that you don't have much of a process for placing stops, and you're being hindsight biased in terms of, oh, I set a wide stop and I got stopped out, so it should have been tighter. Oh, I set a tight stop and it stopped and then worked. Oh, I should have set it wider. Your question to me strikes me as a little woulda, coulda, shoulda, without a good process in place. So that's really the first place you want to look. But your question at the second part of it, at least, it kind of says, hey, Merritt, like, how can I figure out a good process for placing stops, which is the right question to be asking. I think most importantly, it needs to adjust, be variable based on, as you said, I wouldn't call it, but daily condition, right? Daily conditions is what I would say. If it's a wide-ranging, volatile, sharp moves, you're most likely going to need to have some wider stops. If it's a quieter day where there's nice little clean looking moves, you can have tighter stops. So it depends on short-term conditions. Also, for some people, it depends on the big idea. There's so many ways to go about placing stops. And as I tweeted this past weekend, there are no free lunches. If you set a wide stop, you are going to increase your win percent and you're going to lower your risk reward. If you set a tight stop, you are going to lower your win percent and you're going to increase your risk reward. Period. There's no free lunch. One hurts the other. It's a matter of choice. Ultimately, for me and a lot of good traders that I know, it's a matter of getting to a level of skill and understanding to when and where to deploy various tactics. So as I mentioned, that's important, is to kind of monitor those conditions and start to learn when and where to deploy different tactics. I think that for newer traders, if I could go back in time and maybe teach traders differently or train them a little differently or advise them a little differently than I generally have, I think some of what I tried to get traders to do right off the bat as new traders is just a little too difficult. I think, the advice I would give would be go wider with your stops before you go tighter. I think that's a good advice because I've talked about this in depth with our community. The tighter your stop is, the more dependent that trade, working or not, is on your precise, skilled timing of trades. Well, guess what? Newer traders don't have those skills. So it makes sense for newer traders to maybe try to work on those skills, try to time those trades as good as I teach anyone to do it, but then use a wider stop. So in NADRO terminology, a DVA condition-based stop with a normal rhythm and momentum-based entry, the pairing of those two things, I'm seeing a lot of people start to have success with. So that's kind of my take on that. Great questions today, guys. Enjoyed it as usual. Thank you guys for being here. Thank you guys for the thoughtful questions. Thanks for being a part of the NADRO community, the Apteros community, and hope to see you guys on the desk soon. Take care.